800-951-0592. Cases of silver eagles. Well, you guessed it. Up again. $20,500. Rolls of silver eagles, $825. Rolls of dimes today, $140. Rolls of silver quarters, $280. Silver half dollars. I can get them, but I'm not going to sell them. But if you have to have them, call me and I'll give you the price. It'll be, put it this way, well above $300 a roll. I mean, right now on half, you'd be better off buying silver eagles just because the premiums on half dollars just can't get them right now. On the gold side, $2,545 $2,545 for 20s. And I know, I get it. It's a lot. If you want to pay more, keep waiting. The deal still is in the $10 pricing, but that deal, at one point, remember, I think we were like $95 less and $75 less. It keeps shrinking here. Right now, 1 through 9 at $1,250, 10 or more, $1,240 at 800-951-0592. And as I said yesterday, this differential between the 10s and the 20s is starting to disappear rapidly. The bullion banks are telling me, hey, we're starting to run low here. We're starting to bump up, right, our prices on those 10s. And Jason, I don't think it's going to be much longer here, really, in any of these of the metals, right? Prices continue to go higher. We've been running those those 5-ounce silver bars. We're checking. We may be out. We're checking right now. I hope to have you an update after the next commercial break. But that's just how it goes, right, Jason?
Yeah, you think about it. You basically said that we're on the cusp of selling a silver dime for $3. I mean, can you imagine? 140 a roll. We're about $10 a roll from having each silver.
Remember, we did that commercial. What was that? Four years ago, something like that. You did that commercial. That silver dime's now worth $2.
Yeah, it's over $2. Well, it's going to be over $3 pretty soon if it keeps going like this. Yeah, $3 for a silver dime.
We're talking about the Fed. Okay, I just got a thumbs up. 5-ounce silver bars are now $165. If you want to get a 5-ounce silver bars, $165. There is a couple hundred more available. So that, at least that's good news, right? When you're thinking about, where the price of silver is headed, that's $33 to the ounce. Silver Eagles right now, they're at 41 and a quarter. So it's still a big savings there if you want to start stacking those silver bars. Think about it, 3 days in a row. We started at what, 155? Then it went to 160. Now they're 165. If you want to pay more, wait longer. We are going through the Fed minutes. Here's what's really bad about it, because they talked about what their new baseline is. New baseline now is mild recession. Here's what disturbed me about that. These guys in their quote-unquote baselines are ridiculous, right? Remember, inflation's transitory, right? Then they tried to do disinflation. All of their guesses have been wildly off. Now, they said their baseline is mild recession, but Jason, this is what worries me because I think they already know. Inside of that, they said if and when, and I'm throwing the when in, banking and financial conditions and their effects on macroeconomic conditions were to deteriorate. Okay, why don't you just plainly say, listen, if the banking situation or other financial conditions get worse, more than what we already are anticipating. Of course, they don't tell us how much more they're anticipating, but they did acknowledge, by the way, we anticipate more of it. Then the risk around the baseline would be skewed to the downside. So in other words, let me tell you what they really said. Man, we are hoping for a mild recession. But if anything else breaks, then it's going to be worse than a mild recession. And Jason, this is what everyone needs to prepare for.
Yeah, if the average guy walking the street knew what is happening, they would all be running to the bank to change their situation. They'd be, there would be all the kind of things that would be happening to make the markets just crash and burn, and everything would be going haywire. The powers that be are doing a really good job to keep everything kind of sounding calm, because there are people like us and people that listen to this show that know that things are not okay. And, but that's just a small minority of the population. Everybody else is walking around. They have no idea. When those people wake up and see that there's some things that are very wrong, then it happens all at once, like you've been saying, Joe. And so they're doing a really good job of just trying to, there's a few things that are weird, and don't worry about that stuff. Well, we'll tell you when it's going to be bad. It's not bad. It's not going to be bad. Oh, mild recession. We've been through those before. Mild recession, and all that shushing of the common guy out there is only going to work for so long, Joe. And this is why people that listen to the show are better off, because they've known to take measures to solidify their position so they can handle a rip-roaring harsh recession or even a depression. That's what you got to prepare. You got to be prepared financially for these things or suffer the consequences.
Listen, this is just simply stating the dollar's going lower. We've been talking about this. I mean, go back to what Jason and I were telling you at the end of last year, right? We talked about the stair stepping. We talked about, listen, last year was one of the greatest years ever for the dollar. And remember what Jason and I told you. 2023 is going to be one of the worst years ever for the dollar. And that's exactly what's happening here. Whether we get one more rate hike or no more rate hikes, it's pretty clear now. I think we're setting ourselves up for a one and done or a none and done. But the problems that are growing here, all the risk in these minutes are saying, well, the risk is to the downside, right? If job losses pick up, the risk is to the downside. If the banking crisis gets worse, the risk is to the downside. If financial conditions get worse, the risk is to the downside. Not one person was talking about any of these things being better than the quote unquote baseline, right? They were all talking about it being worse when we get back. The era of a small deficit has come to an end. The first 6 months of fiscal year money or data is in. You won't believe it. 800-951-0592. Gold is up $33 here, 2,044. I'm watching that June contract right now. 2058. And Jason, that's right at the all-time close, right? Right there. Is that the high all-time close?
I was looking at the 100-year gold chart, and 2,058 and 40 cents was the year high in 2020. We also got to $2,043.30 in 2022 as a year high. So that's we're breaking through the previous almost high of 2022, and we've broken through. Essentially, we're breaking through the all-time high. Once we break through this number, Joe, let's say we end at 2060 today. Tomorrow it could be 2090. It could be 2150. You just don't know something. And sometimes you did this. I wasn't paying attention in 2011 and around those years. There was days where gold would go up $100 and it would go up another 50 the next day, and it just went crazy upwards. And I don't know if we're headed for something like that, but anything's possible with the way things are headed.
Well, so much of that trading is computer generated trading. So usually when you break above those historic levels, you tend to get these computers to buy. And right now, I think with the news being so down, the desire to sell at that level is less and less, because I'll use that as a way to sell to. Hey, I'm going to test you here, right? We're going to put some selling pressure on you. But with the data points over the last several days, that desire doesn't seem to be there. We'll watch it. Silver, by the way, up 44 cents, 25.90. And by the way, every other silver contract is well above $26. We're now seeing in the future, I'm seeing a $27 silver contract. Starting in October, the October gold contracts hit $2,100. So it looks like, looking out to the future here, prices are going to continue to rise. If you haven't called before, do it. Listen, we're not like all the other gold. There's no baits and switch. Just call the 800 number. Tell the girls. By the way, believe me when I tell you, my staff here, these girls are exceptional. They're going to treat you with kid gloves. They'll answer all your questions. We don't have commissioned salespeople. They're not going to pressure you. They'll answer all your questions for you. The best thing to do is say, I want the special. That's usually the best thing to do. And they'll just tell you what they are, and you pick them out today, right? We've got $10 gold, right? 1 through 9 at $1,250, 10 or more, $2,140. We've got those 5-ounce silver bars. They're at $165 at 800-951-0592. Remember last year, the Biden administration, and it doesn't matter, try to brag about the budget deficit and how it was only $1.4 trillion. Well, we don't even know what the exact number is, because you got to remember, we're taking emergency measures right now because of the debt ceiling. But even with that, tax revenues have fallen this year and are continuing to fall. But they said that the deficit for the first 6 months of the year have now totaled $1.1 trillion. And like I said, we're at the debt ceiling. So that number, Jason, is understated, because you got to remember the Treasury, right? They're not paying pensions. They're not paying all this stuff. They're taking all of these emergency measures. As soon as the debt limit gets passed, the Treasury is going to borrow a bunch of money, get more money into that checkbook of theirs. Already, though, Jason, we're looking at a budget deficit. We told you this last year. Listen, we knew it was going to be north of $2 trillion. The question will be, is it a mild recession? Or as the Fed said, hey, all the data points, if it gets any worse, we're going to have something much worse than that. Are we on the cusp of $3 trillion budget deficits? And think about this. It's not like it gets better from there. Right, we're at this pace. We're at two to 3 trillion year after year, Jason. It's incredible. In a 10-year time, we talk about the federal budget deficit. We're at like 32 trillion or wherever the debt limit is. It will be a miracle if we only add another 32 trillion in the next 10 years.
And we know what the game is as far as raising interest, because interest rates are of course going to cause the debt to be way worse, the deficits to be bigger. And we can talk about, well, when things get really bad, eventually they'll have to lower the rates and print the money. And that's going to be the last play, of course. But if they really try to push this thing, Joe, if they want everyone to have a little pain for a while, they very likely, if inflation, if they see, they're going to see the inflation roaring, because all their numbers are dragging, right? If they see that inflation was, say, in December or October or maybe next January, if they foresee it going up massively, they could just keep on doing quarter-point rate hikes and just let the financial world burn. Just because that's not what they've done in the past doesn't mean they're not going to do it this time. And Joe and I are calling for one more quarter-point rate hike and then a stop. Well, these deficits that Joe's talking about are going to become record highs if they just simply freeze where they're at. If they just freeze it where it's at, everything's going to stay much more expensive for a long time. And if the inflation if it's not controllable, well, then they might just they could let the financial markets burn while they try to stay on top of inflation. Because I'll keep saying this, the Federal Reserve doesn't have a place of existence if they let inflation get out of control. If there is inflation that's out of control, there is no need for a Fed.
Then we don't need them. I agree. Yep. I agree. But I don't think the generally dumb public understands that. But to give you perspective, this is the second highest 6-month deficit ever. You know what? Ever. The only one that was higher, 2009. You got to remember, it's October through March. So that was the height of the financial crisis, is the only time we ran a deficit higher than this one in the first 6 months. That's a big problem because we're nowhere close yet to a financial crisis. Patriot Radio News Hour. We'll be back wrapping it up. 800-951-0592, wrapping up this Thursday. Joe and Jason, we got the half-empty cup coming up next. Bill Roberts. I know a lot of you really like Bill Roberts. He's going to be talking about what's going on in agriculture. Jason, I don't know if you saw, there was this crazy fire at this massive dairy. I want to say it was in Texas. 18,000 dairy cows burned to death in this fire. I mean, it's crazy what is going on. All these things popping up with the food supply. I'm sure Bill's going to be telling us all about that in the half-empty cup.
Yeah, I still have the visions that I watched from that candy bar factory blowing up. It looked like something out of I guess Ukraine. That's what it looked like. It looked like a candy factory blew up like the Russians just bombed the Ukrainians, right?
That's a barbecue smell you don't want. I would imagine 18,000 cattle just all at once. Yeah. It's crazy.
Well, because absolutely crazy. People think, well, I'm going to go out and have a barbecue this weekend. It's been a lot warmer, but burning skin and hair off a cow is definitely not going to smell good, Joe.
That's not the smell you want, right? Yeah, no.
Yeah.
So that's coming up next. If you want to, if you're not in Colorado, you want to go to 1360khnc.com and you can stream us in that way. We got the next 2 hours coming up on that. But wrapping it up here, another big update in gold and silver. Gold now flirting with new all-time record high closing prices. We'll watch it. It's and again, I think where it stops is kind of the bigger question. And right now, if the outcome that the Fed talked about in their minutes happens, and that downside risk that they're hoping doesn't happen, don't be surprised. I would not be surprised to see $2,500 plus. I've already said in silver, I think silver is going to be in the 30s before the year is over. Getting to 40 wouldn't even surprise me, but I guess if I got my baseline right, silver in the 30s there. 5-ounce silver bars at $165. The $10 gold pieces 1 through 9 at $12.50, 10 or more at $12.40, at 800-951-0592. And I guess we'll wait for tomorrow. Now, tomorrow, there's not any big economic data points that I know about, but it'll be interesting to see how the markets end the week.
We'll see, Joe. We'll see. We might have hit a point where, just like a couple of weeks ago, where we were we're just bumping up against 2000 and just kind of sat there for a while. Well, look, we got past 2000 immediately. It's pushed almost to 2050, right? So I don't see why maybe we sit here for a day or two, maybe through the weekend, and then Monday or Tuesday we push through the all-time highs, and then what? I guess right straight to 2100. I guess that's a very likely scenario, Joe. As we keep gold just keeps on. It's just walking down the path and nothing's getting in the way of it, right?
Well, and again, that's that stair-step effect. The dollar continues to be on the back foot here. Look at, again, like I said, the 10-year note down at 3.4%. It kind of telling you, the bond market has been telling you, remember, Jeff Gunlodge, Muhammad El-Arian. I mean, all these guys out there, they think recession is coming, and they think it's going to be here before the summer gets here. We'll see how it all plays out. 800-951-0592. Joe and Jason, we're coming right back with the Half Empty Cup.